There are times you should trade and there are times that you should turn off your devices and get off the charts. One of the reasons why you may be struggling in trading Forex and not being successful is that you don't fully understand when the best time to trade Forex is and the best time you should be looking for trades. You can see a very clean setup, a very clean trade that completely follows everything on your trading plan, on your rules. But if you enter the trade at the wrong time, I can guarantee you 9 out of 10 times that trade is not going to work out, which is why you need to know the best times you should be trading and the times you shouldn't. In this video, I'm going to be showing you just that. So make sure you stick to the end of this video so you can find out.
First of all, we need to know the Forex trading sessions that we have in the market. Then we can then identify the timings of each session, and then we can identify the characteristics of each trading session. Then I'm going to be showing you guys some examples at the end of the video. So make sure you stay tuned. Because if you only know the sessions and you don't know the times and you don't know the characteristics and how they work on the chart, then the knowledge is basically useless. So first of all, you can see here on the screen that we have the Sydney market open, we have the Tokyo session, we have the London session, and then we have the New York session. So if you go on the internet and search for Forex trading sessions, these are the main sessions you're going to see: the Sydney session, the Tokyo session, the London session, and the New York session. Now, the way I like to do it, I prefer to say there are three main Forex trading sessions, right? The Asian session is a combination of both the Tokyo and the Sydney session. So these two sessions are both Asian. So just combine them together and it becomes one session. So that's your Asian session. So these two together is your Asian session. Then we have the London session. Then we have the New York session. So the Asian session is a combination of both the Tokyo session and the Sydney session. Two of them make up the Asian session. Right. So the three main sessions we have in the market is we have the Asian session, which comprises of the Sydney and the Tokyo session. We have the London session, which that's the Asian session first, then the London session, then the New York session. Right, then the Asian session again. So liquidity begins to come in at the end of Asian session, coming to London session, then we have the New York session. So now that we know what the main sessions that we have, the three main sessions that we have, Asian session, London session, and the New York session, we need to understand what are the exact timings for these sessions. What times do they occur? When are the times that each session opens and closes? So now the Asian session starts by 5 p.m. EST and closes by 3 a.m. EST. So it starts 5 p.m. EST and ends 3 a.m. EST. This is the Asian session. So make sure you write this down. Grab your notes, grab your pens, write this down so you don't miss it. This is crucial if you want to understand timing in the Forex market. So 5 p.m. EST, Asian session starts and ends 3 a.m. EST. Then there's what we call gap time. This is a 30 minutes time frame where that's kind of like joins the Asian session with the London session. All right, so we have a gap time in between the ending of Asian session and the beginning of London session. So it's a 30 minutes gap time. Now the London session starts by 3:30 a.m. EST. So we know that Asian session ends by 3 o'clock, 3 a.m. EST. Then we have this 30 minutes gap time. So that means London session is gonna start by 3:30 a.m. EST all the way up to 9 a.m. EST. So convert this time zone to wherever you are in the world. So convert the EST to wherever you are in the world. All right. So 3:30 a.m. EST, London session starts and ends 9 a.m. EST. And then we have another gap time coming into New York session. This gap time is about 30 minutes. And then the New York session starts by 9:30 a.m. EST and then ends by 5 p.m. EST. Then everything starts again from the Asian session, 5 p.m. And then it goes like that for every day, 5 days a week, as long as the Forex market is open. These are the three main sessions and these are the timings. So make sure you write them down on your notes so you don't have to forget. So now, what are the characteristics of each trading session? Each trading session has its own behavior, has its own characteristics. Right? They don't all behave the same. They have different movements and different behaviors. So the first one is the Asian session. This session is known for its consolidation, and there is little to no volatility available in the market. This is usually where we call it the dead markets, where the market is just moving sideways, consolidating. There's no volatile movement in the market. It just goes sideways. And if you're trading this session, you're going to notice that it's going to be very, very boring and it's a waste of time because the market is not moving. All right, so the market is just going to be going slowly, slowly till the London session. So for about 8 to 10 hours, the Asian session lasts for about 8 to 10 hours. And during that 8 to 10 hours, it's just full of consolidation. So it's not worth trading the Asian session. The London session starts after the Asian session, and this is the most volatile session in the market. This is where you will have breakouts and fast bursts in price movements. So once the London session starts, you're going to notice that the volatility enters the market almost immediately. The market begins to move. You're going to see fast bursts. Like the market is you're going to see just one candle just stop pumping in one direction, start pumping in the other direction. You're going to see movements in the market during the London session. The London session for me is my favorite session to trade, followed by the New York session. Now, the New York session, the behavior here is this occurs after the London session and has a decent amount of volatility. Most of its volatility comes from high impact news. Now, the New York session is also volatile. The London session is the most volatile, but the New York session also has some level of volatility due to high impact news. And the high impact news usually, I'll say like 80-90% of the time happens during the New York session. So the New York session is actually very volatile, mostly because of the news. If there's no news, it still moves, but doesn't move as much when you have news. So now I'm going to be showing you an example of these behaviors in the charts here. And let me just show you an example of this consolidation, the breakout, and the New York session moves. So Asian session, we know it starts by 5 p.m. EST. So I told you that Asian session is the dead session of the market where you can just have slow movements, consolidation. The market is going to be going sideways, bouncing from support to resistance, back to support to resistance again. So this is lasts for about 8 to 10 hours. Market is going to be consolidating, just going sideways, right? Immediately after the Asian session, we have a gap time, and then we have the London session. All right, so you can see the gap time here highlighted by yellow. This yellow box is the gap time, and the green box is the London session. So after the Asian session, 5 p.m. EST, all the way up to 3 o'clock a.m. EST, we're gonna have a 30-minute gap time. You're gonna see some swings. They might break out to the upside and then break out to the downside and then come back during this 30 minutes gap. And then we're gonna have the London session start by 3:30 a.m. When the London session starts, you're gonna have volatility coming into the market, and then this is gonna cause the market to go in one direction, either to the upside or to the downside. In this example, I'm showing you the market going in the upside. So you're gonna have this price movement to the upside. This is the London breakout. I don't know if you've heard of the strategy, the London breakout strategy. This is why the London session breakouts strategy exists, because of this concept of the market consolidates during the Asian session and then volatility enters into the market during the London session and then breaks out of that consolidation during the London session. And immediately after the London session, we have what? The New York session. So usually these breakout moves in three pushes, 3 steps, 3 spikes. I'm going to explain this in deeper detail in my videos. So if you want to check them out, you can check my videos. You're going to see me explain this concept. All right. So we're going to have 1, 2, 3. Then the market's going to pull back and give you an M formation. You can call this a double top. All right. When the market gives you this double top, usually it's either the market reverses during the London session or it reverses during the New York session. Most of the time, it reverses in between, coming like during the session changeover. That's when the move is going to get completed, and then you're going to have the move coming in during the New York session. So you're going to have a gap time immediately after the London session. There's a gap time, 30 minutes gap time, and then the New York session starts 9:30 a.m. EST, and then you're going to see a reversal. The New York session, the characteristic of the New York session is for the reversal. So the characteristics of the London session is for the breakout. The characteristics of Asian session is for consolidation. Now, the characteristic of New York session is mostly for reversal. Now, not every time. This does not happen every single time, but this is the basic standard for the New York session. It's known for its reversal. So if the market has been going up all throughout the day for London session, can expect at the beginning of New York session or maybe at the middle of the New York session, you're going to have a pullback or a reversal. Right, so market's going to form this M formation and then reverse back down. Down here is going to give you a W formation. Sometimes it will not give you a W formation. It's going to come back and come back into consolidation. So the cycle is going to repeat itself over and over again. Let me grab my pen. So you're basically going to have this pattern consolidation. Market is going to break to the upside during London session. It's going to reverse during New York session, come back down, give you a W formation, and end the day back in consolidation. Right. So this is the example of the market going in the downside. So you have the W formation during London session. You're going to have a breakout during London session. You're going to have a reversal during New York session, give you an M formation, and then reverse back down. Now, they will not always give you the M formation, and they will not always give you the W formation. Sometimes they will just give you something like this, break to the upside, reverse, break to the downside, reverse back, and end the day in consolidation. So they're not always going to give you that M formation or that W formation. They'll just give you the first leg like this and reverse. All right. So just to note that. So now let me show you some examples on the chart of this pattern, how it works, and let's get it. So here we have an example of the pattern I just illustrated for you guys. So we have the Asian session consolidation here. Price consolidates during the Asian session. Remember, this is it starts at 5 p.m. EST and then lasts for about 6 to 8 hours. Sorry, 8 to 10 hours. This consolidation. So you can see this is dead movements. Price is not even moving that much. But coming into London session, you have these breakouts here. Market breaks out to the downside, gives you a W formation during the London session. All right, so we have this gap time. Let me show you the gap time. The gap time is from here like this to here. This is the gap time. All right. And then the London session starts. And then we have this move to the upside. And then the New York session starts, which is this red box. All right. This red box. The New York session starts, gives you a spike. If you go on the lower time frame, you might see an M formation there. Price comes back down. And then what happens? End the day back in consolidation. We have another example here. We have the Asian session consolidation. It's 8 to 10 hours of consolidation. 8 to 10 hours of consolidation. During the gap time is when we have the breakout. So the breakout happens during the gap time. They kind of hold the level during the London session, coming into New York session open. Right, New York session opened here. And you can see immediately after the New York session opened, the markets give you an M formation and then basically dropped drastically and then reversed and then came back into consolidation. So back into consolidation. They opened the day here and then ended the day up here. So it's basically like they didn't make any move for the day. All right. So consolidation, breakout, M formation, break to the downside, give you consolidation. All right. So we have another example here. We have the Asian session consolidation, right? We have this gap time here. During the gap time, we can see the market spikes up with this candle here during the gap time and then pushes to the downside. We have 1, 2, 3. 3 candles, 1, 2, 3 candles going to the downside. Then we have this W formation that formed at this low here. The market reversed when during the New York session. So we have the New York session reversal here. And then the market continues to the upside. We have another example here. Same thing, same pattern. Asian session consolidation. We have the gap time here. The market breaks to the downside. Right. Market breaks to the downside. We have this W formation. This was actually a trade that I took. I took this trade somewhere here or here. Was it here or here? All right, my stop loss was like down here. My take profit was up here. So I caught this entire move. All right, this was a trade I took. You have this W formation here. Take this to the upside. You can see price eventually reverses during the New York session. So we have the price reversing here during the New York session open and then reversing back down during the New York session ending. Right. So at the ending of the New York session, the market forms the high of the day and then comes back down and then begins to consolidate one more time. So here we have the same pattern playing out 2 days in a row. So we have this Asian session consolidation here. Market breaks out during the London session in 3 moves. So we have 1, 2, 3, right? 1, 2, 3. Then the market reverses, goes to the upside. This reverse during the London session, market goes to the upside, reverses during the what? New York session, comes back down into consolidation here again. And then the next day, the same thing happens. Break to the downside, the B formation, break to the upside, reverse, end the day back in consolidation. So here we have this pattern 1, 2, 3, 4, 4 days in a row. So we have the consolidation here. They broke out in this example, they broke out during the New York session. So they used the Asian session and the London session for consolidation. They broke out during the New York session, gave you this M formation, and then broke to the downside. All right, ended the day in consolidation, started a new day, broke out of this consolidation again from this M formation, reversed during the New York session. So you can see this is the moment they reversed. During the New York session open, they reversed, came back down. Then we have this example here. All right, so we can see the same thing happening over and over again. These patterns occur on the chart every single week. So you just have to train your eyes to be able to see them, to see these patterns, right? Muscle memory, brain memory, whatever you want to call it. All right, so if you guys want to learn more on this strategy, you can simply join the Trading Academy. I have a Trading Academy where I'm going to be teaching you how this works. I'll teach you how to trade these patterns with high accuracy. So what I want you to do is go on your chart, look for these patterns, backtest these patterns. So you can clearly see them and you can train your eyes to see these patterns. And if you want to learn how to trade them more accurately, you can join the Trading Academy. So if you want to join the Trading Academy, this is what you're going to get. This is the free academy at the moment. You're going to get access to a community of traders. So join us on this journey of learning and growth in the world of trading, whether you're a seasoned trader or just starting out. So it doesn't matter if you're a beginner trader or maybe you've been trading Forex for a while now. This community is a place where you can connect with like-minded individuals, share insights, and support each other on your trading endeavors. So inside the academy, inside the DFX Elite Academy, you get access to these for free. You get access to the beginner guides to Forex trading. If you're a beginner, you don't know anything about trading Forex, we're going to have an M&W formation course, M&W reversal course inside there. So I'm going to teach you, I'm going to teach you inside the course how to trade the M&W formations, the entries, how to spot these formations and everything. And then I'm going to show you, I also have a market structure course for beginners. So if you're a beginner, you can watch that. We're going to be having weekly live calls, live Q&A calls, trading sessions inside the community. And inside the community, you're going to also have access to more courses. So we have more courses here that I haven't launched yet. They're going to be launching in the upcoming days and weeks. So we have advanced market structure, market trends and levels, liquidity and stop hunts, market structure, daily and weekly structure course, London breakout mastery, my own personal A+ setup trade, the trade that I love, my bread and butter trade that I love, my A+ setup, other ways of identifying trends, how to identify trends using different methods like levels, moving averages, ADRs. I'm going to explain those terms inside the course. We have a continuation trading strategy and we have a risk management trading strategy, and we're going to be adding more courses inside the academy with time. All right, so these are the ones available right now. So this is where we're going to be having the live calls. We had one last week, Q&A trading session. We also had one this week on Monday, another Q&A trading session. We're probably going to have another one this week. You're going to be seeing them here, the upcoming events here. I haven't set it up yet because I haven't confirmed if we're going to have anyone this week, but you're going to be having weekly live calls every single week inside the academy. So if you want to join the academy, consider joining. It's free right now. So I'll see you guys on the next one. Subscribe to the channel if you like this video. Leave a comment if you have any questions, and I'll see you guys on the next one. All right. Peace.